We've got a special guest co-host this morning, Paul O'Neill. He served as U.S. Treasury Secretary from 2001 to 2003, also served as CEO of Alcoa from 1987 until 2000, and he joins me once again as a guest co-host on InBusiness. Welcome back.
Thank you very much. Nice to be here.
It's a historic day. Certainly, economists around the world listening in very carefully this afternoon. What's the one question you would like the reporters to ask and get an answer to?
Why are you doing this?
Why are you doing this? Why is the Fed chairman doing it? He clearly feels he needs to.
I think the idea of being more transparent is a good idea, and it's something he's advocated for a long time. I tell you, I had a rule, which I suspect he has in his mind as he begins to do this, which is never make news unless you intend to. And so I don't expect, I will be surprised if he makes news. There may be news in the 12:30 statement they release, but I'd be surprised if he makes news with a blunder or a gaffe or some other untoward thing. I think the Fed's interest and our interest is not to create volatility in the markets, and so I think steady as she goes and letting us know that, yes, the Fed is going to begin raising rates sometime in the next year or so is highly anticipated, and I think it would be okay for him to say that.
Do you think that this decision to move towards transparency, whether it's forced or whether it's a decision that he felt has been needed for some time, is it the right one because of where the economy is, or as an institution, should the Fed be in some ways answerable to the public like this?
Yeah, I think there's some value in the Fed taking a more obvious position in the public announcements and pronouncements. But I would also observe this. Bernanke has not been a hermit.
Right.
You know, he's appeared countless times before congressional committees.
Interviews, right?
Exactly, and they ask him really pointed, difficult questions, and he, like Alan Greenspan, is skillful in only answering the ones he wants to.
Treasury Secretary, I mean, you just hit on that point there of how engaged Treasury Secretary Geithner is in this whole process. You've said publicly that when you were in his shoes, when it came to expectations as to the debt ceiling, you would not allow for there to be any kind of question as to whether or not it would have been heightened. How do you rate Geithner and his handling of this issue?
Well, you know, I think each secretary needs to be judged in his own context. You know, I believe that administrations now for the last 30 years have made a mistake in this sense. There is now a set of practices that are employed that are effectively accounting engineering to extend reaching the debt ceiling. So Tim Geithner has said we're going to reach the debt ceiling on May the 18th,
right, and
he hopes that the Congress will act by July.
Right.
You know, well, how do we get from May to July? By doing financial accounting tricks. I think it helps the Congress to avoid being responsible. I think that's a really bad idea.
It's a poor political judgment.
Absolutely. I wish Tim Geithner would say, when we reach the debt ceiling, we're not going to do tricks down here at our end of Pennsylvania Avenue. The Congress needs to be responsible and adult and take action on the debt ceiling. And, you know, I think the people who are threatening not to pass the debt ceiling are our version of al-Qaeda terrorists. They're really putting our whole society at risk by threatening to round up 50% of the members of the Congress who are loony, who would put our credit at risk.
So Boehner not ruling out that any kind of debate over lifting the debt ceiling, wrapping that into the budget debate, is seriously a threat. You think he's dangerous?
I do. Because there's a chance, you know, if you just look at some of the things that people say, well, we'll still have enough money to pay the interest on our debt, is beside the point. This is not about permitting spending in the future. This is permitting us to pay the bills we've already incurred.
But that puts us 2 weeks out, if we go by Geithner's schedule, from, you know, hitting that debt ceiling. 2 weeks.
Right.
Can you get Congress to actually do anything in 2 weeks' time?
Well, I don't know. You know, I think we do have a broken political system, and I think it's capable of doing irresponsible things. This whole conversation is irresponsible.
The Obama administration is pushing for a vote to raise the $14 trillion debt ceiling by more than $2 trillion. Former Treasury Secretary Paul O'Neill has been through this difficult process before. He joins us as our guest co-anchor today. You had some very strong words to describe this showdown. You said the people threatening not to hike the debt ceiling are like al-Qaeda terrorists.
I did. You know, I think it's really unfortunate that the political process envelops an issue like the debt ceiling, because the debt ceiling is really about authorizing the Treasury to borrow money to pay obligations we already have. This is not about spending new money, Margaret. This year we've got a $1.6 trillion deficit. Every dollar of that has to be borrowed, and it can only be borrowed if the debt ceiling permits them to go out and raise money.
In some way, is there either a total disconnect from the situation you're describing, a total disconnect of the bond market from this debate, or is in some way the market indulging the political process here by not demanding action? I mean, you've got these historically low rates. It's not pushing the panic button just yet.
I think it's hard for the market and for responsible people in the financial community to insist anything of Washington. The political process seems like it has more and more a life of its own that's independent of the consequences of what they're doing. And so I think responsible action is raise the debt ceiling. Here's an interesting point. If the Ryan plan were adopted, we said we're going to raise the debt ceiling enough to accommodate his plan, we'd have to raise the debt ceiling $6 trillion, because his plan would not create a balanced budget until 2042.
Because nothing happens for 10 years. Time.
Well, he wants to have a whole lot of things happen, but he doesn't hold out as a promise that we're going to have a balanced budget in a generation.
Well, the few people can actually present a balanced budget at this point. We're just talking about trimming trillions, right?
I tell you what, I think things are sufficiently serious vis-a-vis our place in the world that we need to put everything on the table. And one of the things I would put on the table, Simpson Bowles raised the subject of tax reform. I think we need to think radical simplification of the tax system.
Radical simplification, but you're not necessarily saying get more tax revenue by hiking taxes. You're saying change the process.
I'm saying a couple of things. Our current tax system is incomprehensible and unenforceable, and as a consequence, we're not collecting $400 billion a year that people are supposed to pay because we can't find it. In addition to that, economically, it costs $431 billion a year to administer the tax system. Think about that, $800 billion going begging. That's an anchor on our economic progress. And it riddled with credits and deductions and special interest provisions. So I would like for us to start over and ask the fundamental question, how should we distribute the responsibility for paying for the public goods and services we all agree we need?
You want to start reform at the IRS itself, reform the IRS?
I tell you what, I want to start by saying we should entertain the possibility of eliminating individual taxes.
You want to go to a VAT tax? You want to do a fat
tax? Corporate taxes, and I want to go to a VAT tax that's refundable, so low-income people are not harmed by this. But it would be clear and simple and unavoidable, and we could go on and talk about what percentage of the GDP should be collected through a clear, simple, easy-to-understand tax system.
Well, that's not anything near what's been put on the table.
Right. Well, but as long as we've raised the issue, why don't we do it right?
Do you think, though, that there's a mispricing of risk right now in terms of the severity of the deficit issue, of the debt problem in this country?
I think the consequences of not dealing with our long-term unfunded obligation, $75 trillion, is huge, but I think the markets are currently assuming that somehow magically we're going to work our way out of this pit. They don't know how, but I don't think we have discounted into risk premiums the danger of not dealing with these problems.
There are also people who say, you know what, we're completely looking at the wrong thing. Yeah, this is a worry. Jobs first and foremost. Spend what you can, do what you can to stimulate job growth.
So here's what I believe. Our market and our economic system has a way of healing itself. And I believe some of the actions taken by the Fed and the administration over the last couple of years have been pro-stability and growth. But I actually do not think the Federal Reserve or the administration or both combined know how to accelerate jobs faster than the underlying market, or they already would have
Right.
done it. Right?
Right. Some final thoughts with former Treasury Secretary Paul O'Neill, our guest co-anchor for the hour. We're going to get another eco data point that once Bernanke speaks, the market will shift its attention to, and that's GDP. I mean, how do you judge the recovery right now? What's growth like?
You know, I see the economic fraternity is ratcheting down rates. They're now saying 2% real GDP in the first quarter. My own personal sense and looking at the companies that I know well, I think the economy is growing better than a 2% real rate. Maybe not by a lot, but I think we're still moving along in a reasonable way with a natural healing process in our economy. And if we don't have some other external shocks, I think we'll keep doing that.
Well, you know, one thing, and you've been a CEO, you've been a Treasury Secretary, you've looked at these issues. I hear from people the apprehension of what happens after June, after QE2 ends, if it does in fact happen. What's going to happen with credit? What's going to happen with all the cash that companies have been hoarding right now? Are they going to feel comfortable finally to spend it, or are they going to need it because the credit markets might get tight again?
You know, I think as long as the economy keeps growing 2.5%, 3%, ideally 3.5% or 4%, the money that's currently on balance sheets will be put back into play in new capital investment, which is what we need to create more jobs. And I honestly don't think that QE2 has been that important. There's some recent analysis stories that suggest it's had a pretty minimal effect on the trajectory of real growth. I think that's probably right. So I don't fear the Fed stopped buying all this paper. Maybe it's too early to begin selling it again,
Right.
but I'm not fearful about the economy going in the tank because of a lessening of Fed intervention on the credit markets.
All right. Well, I had so much more to ask you about. I wish we had more time, but we've only got about 20 seconds left in the show. Thank you for coming up on what has been a historic day.